Hello friends, welcome to the monastery where mindful trading meets order flows. Yesterday, the market built value around 23,600 to 23,650. Today, something very important happened. The entire value area shifted higher and the point of control moved close to 23,800. The volume profile is telling us exactly how the auction evolved. Welcome back to Mind Monastery. In yesterday's analysis, we discussed how NIFTY had established fair value just below the high. That area represented the price where most trading activity took place during the session. Today, the market did something interesting. Instead of returning to that value area, it lifted the auction higher and built a new value region. And if you haven't watched yesterday's analysis, I will highly recommend you to watch it first, because today's structure is a direct continuation of that auction process. Now let's decode today's behavior. Yesterday's volume profile showed a balanced distribution centered near the high. That means the market spent most of its time negotiating prices in that region, which effectively became the fair value for the day. In auction market theory, when a market spends time building value, it usually prepares for either continuation or rotation in the next session. Today's volume profile shows a very important development. The point of control shifted upward from around 23,609 to approximately 23,800. This shift tells us that the market has accepted higher prices compared to the previous session. In other words, the auction itself has moved upward. Another interesting feature of today's profile is the profile structure itself. You can see a relatively thin HVN in the lower section and then a large HVN higher, showing that bulk of trading activity formed near the upper region. This type of profile often occurs when the market experiences a hold for decision, then a short covering, followed by a value formation at higher prices. Today's profile also shows a thin lower tail, which indicates that the market briefly explored lower prices but quickly rejected them. In auction market terminology, this is called a buying tail, which represents responsive buying activity from the participants. A similar observation can be seen on 16th March. So if we combine the two sessions together, the market structure becomes quite clear. Yesterday, the market built a value around 23,600. Today, the auction shifted upward and established a new value area near 23,800. This sequence represents a value migration higher, which is a key signal traders watch when evaluating market behavior. From these two volume profiles, the most important reference levels become the support levels, that is 23,724, which is the immediate support if the market opens in the value area. It is also the composite POC, and if it fails, then the next support level will be 23,609, which is yesterday's point of control. And further down, 23,400 to 23,450 area can again become a mild support. As for resistance, 23,860 to 23,870, which is today's high, which is also an area with earlier peaks, can become the first resistance if the market opens within value area and below the high. The next resistance will be the psychological level of 24,000, and above that, the composite profile of 24,083 can be the third resistance level. These levels will likely act as the primary reference points for the next trading session. So the story of the market over the last two sessions is fairly straightforward. First, the market established fair value around 23,600. Then buyers pushed the auction higher and the market began building value closer to 23,800. Whenever we see value migrate upward like this, it tells us that the market is comfortable transacting at higher prices than before. If you found this analysis useful, subscribe to Mind Monastery. Please like, share and comment below the video. Every day, we decode markets using volume profile, smart money concepts and auction market theory, because the goal here is not prediction. The goal is understanding how the auction unfolds. Thank you.